An informed buyer is a successful buyer. And every time you're purchasing a property, you should be looking at it with an investment mindset. Here are the top key terms that every buyer should know in preparing themselves for a successful real estate purchase. Affordability. Basically, it's a measurement of your income versus the total price of that home. So you take your income, you take whatever that mortgage would be, taxes, insurance, HOA, and that gives you a percentage. That percentage is your home affordability. Prices, interest rates, and your income all impacts that home affordability. The more the interest rate is up or the more the price increases, the harder it's going to be to make that home affordable. Appraisal. Appraisal is basically a home report that you get from an appraiser used by guidelines for the value of that home on that particular day. It can vary greatly because in California, it's based on your market sales. So if one appraisal is done on 1 month versus the following month, or maybe the next 6 months after that, it can vary greatly. It's important to keep in mind, if you have a reputable mortgage lender, your appraisal will be accurate as possible because they'll use relevant comps that most match the amenities of the home that you're purchasing. Lenders rely heavily on your home's appraisal. That way they can establish the home's baseline value and make sure the bank or the mortgage lender is not lending more than the value of the property. Closing costs. This refers to all of the costs that you pay when you buy a real estate transactions. They can include, but they're not limited to, your taxes, your HOA information, your title, your escrow. It's important to talk to your realtor or your mortgage professional to get a list of all your closing costs, because you can always plan for baseline closing costs. Having a complete list of your closing costs, including all of your items, whether they're recurring or not recurring, is going to give you the best overview of your picture when it comes time to close. Credit score. This is a range from 350 to 800. It's based on your credit history. And what it is it's a numeric score of how well you've paid your credit in the past and how well you've established your credit now. And all of that is ranked of your ability in a score of what your repayment history would be. So if you take out a car loan, your credit score might go down until you repay it, and then it will go back up because you've proven the ability to repay. When you go look for a house, if you've never purchased before, have your credit as high as possible, but you're looking to establish the baseline of you being able to repay a mortgage installment note over a long period of time, which will help your credit score, get it as high as possible, and open up all kinds of opportunity for you in real estate. Down payment. Typically, this varies between 3.5 and 20%. There's even programs available with 0% down. There's two ways to look at it. One, you're putting down money for the home or principal residence that your family's gonna live in. You wanna have a little bit of a cushion. If you're looking at it with an investment mindset, if you can maximize your down payment and have an affordable mortgage that you can have to build equity over time, that's called leveraging. Be able to reach out to your mortgage provider, your lender professional, talk about your options. Maybe come in with something that's best case scenario, 20% down. But as you go through the process, you might want to keep a little bit more of that money in savings, come in with less, and be able to leverage that to be able to buy more investment or have more options for your family later. Equity. This is basically your home's value minus whatever liens or loans that you have against it. Over time, your home value typically will build. We call this equity unlocking. If you get to the point where you can start putting your money in something that will appreciate instead of depreciate, two things get unlocked. One, you get in that equity game. Two, as an investor, you want the depreciation. That will help you build even more equity. Inspection contingencies. These are broad contingencies that allow the buyer a peace of mind to exit the escrow and get their deposit money back. Inspection contingencies can cover your home inspection or any physical inspection that would otherwise have you either negotiate or be able to back out of that sale. This is an essential step in giving you the home's actual condition and the repairs that home is going to need. A mortgage. This one seems obvious, but it's basically the loan that you take out against the home's value, and that's used as collateral. It's important to know that whatever your interest is when you get your home, it's just introductory, and you always have the ability to refinance as rates go lower and lock in that 30-year fixed mortgage after you own the home. So we're out looking at homes. You know what all the key terms mean, but you don't know what that actually means when you go view house 1, 2, or 3 at all different prices. What do? The pre-approval letter. The pre-approval letter simply arms you as the home buyer with what that home is going to cost you and knowing that you're going into the right home at the right price. With an accurate pre-approval letter, you will get the cost of the home, the interest payments, the taxes, any HOA or ancillary amenities or things that might affect the day-to-day payments. The better your pre-approval is, the more you're going to be armed in looking for the best home that fits you at the best price. Pro tip, there are specific pre-approval letters that are written for the home that you're actually looking for. So if there's an address that you've identified, you might want your mortgage professional to do an accurate pre-approval letter based on the offer that you wrote for that specific home. Next, you have a general pre-approval, something where you have a price point that you're comfortable in being able to submit offers across the board. It might be a market where there's multiple offers on multiple homes. It's important to have a pre-approval letter that you can write multiple offers, so that way you don't have to go back and redo multiple pre-approval letters for each offer that you write. So here's some simple key terms and phrases with a little bit of explanation that will hopefully arm you in your home buying process. If you need any additional information, feel free to reach out to us anytime, DM us, follow us, like us for any more content, and good luck in your next real estate purchase.